Good morning. Assalamu alaikum. I would like to welcome you all for the analyst and the investor presentation for H1 2023. We would like to welcome you for the session, and I would like to introduce myself. I am the financial controller of the company. My name is Hitesh Popat. Joining with me today is our Deputy CEO, Mr. Shakib Mahmood, and our Board Secretary, Mr. Hilal Al-Rashdi. We would like to thank MSX for providing us with this opportunity where we can discuss and interact with the analyst and the investor community. We have a brief agenda for today, where we will be displaying the company overview, presenting you with the company's past performance, H1 2023 results, outlook, followed by a Q&A session. With this, I would like to now hand over the floor to our Deputy CEO, Mr. Shakib Mahmood, to give a brief about the company overview.
Thank you very much all for joining us, and thank you, Hitesh. It's a very good initiative by MSX that we get a chance to talk to our investors and the analysts. So please use this forum to ask any questions and doubt that you may have regarding the company. To start with our vision, mission, and values, our vision is that we want to be the leading insurance company in Oman, where leadership is measured. And when I say leading insurance company, I'm not talking about the Takaful company. I'm looking at the entire insurance space. Takaful, probably we are already the leader. In terms of the profitability for the stakeholders, because they have come together, they pulled in their money that we have to give them a good, healthy return. Satisfaction of our customers, which is paramount for us, and we continuously work on the satisfaction. Our goal is the service rather than making money. And we have done a survey ourselves with our customers. 96% of our customers have confirmed that they believe that our services are either excellent or good. So 96 is a huge number. But this was also checked by Marsh International, although I don't know whether I can use their data or not, but they have an international report whereby they have looked into the service criteria on 6 parameters, including the TAT and satisfaction and settlement of claims, etc. We are the highest in their survey as well in terms of the industry averages. Commitment to our employees. We are also committed, the third stakeholder, our employees. We take care of our employees beyond what the industry does. For example, recently we have started a new initiative whereby all nursing mothers, expecting mothers, and mothers with 6-year child, they are allowed to go 2 hours before the end of the day. They leave earlier than what the law is saying now, 1 hour. We give them already 2 hours. Then the mission to provide cost-effective insurance solutions and superior customer service in a manner which is Sharia compliant. And that's very important because we are the Takaful company. It has its own challenges, Sharia balancing with the sustainability of profit, etc. But we have been, alhamdulillah, doing it successfully. Values are innovation, continue to find new solutions, social responsibility, transparency, integrity, and teamwork. This is how the company evolved over the years. It was established in 2006 in Oman as the Al Madina Gulf Insurance Company, which was a conventional insurance company. And later, the promoters believed that they wanted this to be done in accordance with Sharia. So this was converted as a Takaful company in 2014 with general health and family insurance. Al Madina has now grown into a US $116 million company, and its third largest insurance company in terms of the gross contribution, with a market share of 9%. And of course, as a Takaful, we are the biggest and the largest. The company has a balanced and stable portfolio across all lines. We do primarily corporate. We are a corporate insurer largely, government business, as well as personal lines. And we have 7 branches, 1 sale hub, and 1 kiosk across Sultanate of Oman. The first Takaful company in Oman, Al Madina, has paid up capital of 17.5 million Riyal Omani. which is equivalent to $45.5 million as against a regulatory requirement of 10 million by the regulator as of now. Although I hear that the regulator is planning to increase this limit to 20 million, if not 25, but nothing has come out so far. So right now it's 10 million only. We strictly adhere to the Sharia principle, and we have a Sharia board, which looks after everything which we do, and they meet every quarter. And once in a year, they meet with the board of directors also. So there's a joint meeting. Al Madina has remained profitable consistently for last 7 years and continuously paying dividend to the shareholders. And we have almost in last 7 years returned 50% of the capital as dividend, which is quite significant. This is the 18th year of operation, and we are still evolving and growing. Anyone has any questions, please stop me and ask a question. I'm happy to answer that. In terms of our top line, which is gross written contribution, you see from 2007 onward, we are just growing in just one direction almost. But the growth is not haphazard. We do not want to grow in such a way that we want to achieve the sky, although my last line says sky is the limit. But we don't want to touch the sky quickly and while compromising on quality and service and profitability for the shareholders. So we go very cautiously and pick and choose the profitable businesses. As you all know, we are in the business of risk management, i.e. you have to accept risk, mitigate, and risk transfer. We foster harmony for all our stakeholders. The company is engaged in the business of general family takaful, I've already told you, under the model of Wakala and Mudarba. Wakala is a model where the company or the shareholders work as agent of the participants, i.e. the policy holders have their fund, and then the company is the agent and they charge the agency fees. So that's called Wakala. Mudarba is relating to the investment where you share a certain percentage of profits if you make profits on the investment. One of the largest energy, power, and health insurance in the market, build across customer loyalty through exceptional experiences. I've already covered that. Leading takaful provider and partners with major Islamic bank in Oman, almost all we work with. Wealth of experience in effective managing diverse client across multiple industries. We are very proud that we have a very good bench of underwriters and claim handlers. They have large experiences across Europe, Middle East, and Asian subcontinent. Efficient claim servicing with international best practices, actuarial valuation of reserve in line with the best industry standards and IFRSs. Unfortunately, we have to follow both the standard, IFRS and IOF, which is a Sharia standard. So wherever Sharia standard is not there, IFRS come as a parent guiding standard. And in terms of reserves, it's very easy for an insurance company. If you have to see a performance of an insurance company, you should see their reserves going upward or downward. It's very easy to release some of the reserves, play with the numbers, and show profitability. And I'm very happy to announce that in last 6 years, our all reserves have multiplied manifold. Some 2 times, some 3 times, some of them 4 times even. And those numbers are there for everybody to see, may it be the provision for bad debts, or it's the UPR, or it's outstanding claim reserve, or it's IBNR reserve. Everything has just gone in one direction and multifold. Business distribution mix. This largely shows you that we are more into technical and motor, less in medical and life. And that's our strategy actually, because medical is typically a line which bleeds. So we want our medical line to be profitable. And in none of the businesses, we are on a combined basis touching 100 or more actually. So if you are on a combined ratio basis, you are 100, that means you're not making any business. And that's why we pick and choose those businesses which have been a track record of less than 100 combined ratio. They give profitability to the company, and hence you will see a slight reduction in medical. However, medical is going to be mandatory, and that's I'm hearing for quite some time. CMA is working on it. It's gone to the big authorities, the higher authorities. Once that happens, that our medical business should see upward trend. But as of now, we want to maintain a balance of profitable business. Al-Madina is strongly committed to increase in-country value concept, and most of our things we do within Oman. Our Omanization percentage is in excess of 75%, which is required by the regulators. We are almost 78%. We recruit and train Omani national. We have recently initiated a leadership program for Omani nationals where they will be trained into all sorts of departments and activities so that we can develop leaders in this industry where Omanis are lacking in leadership role. Business retention in Oman, try to do as much as retention in Oman, provide ICV through CSR activities, and more than our 85% of our investment, although we can go up to 30% out and 70 in Oman, but we keep 85% in Oman. So we want to inculcate and promote the concept of in-country value. Company's past performance and snapshot, I will ask Hitesh to take you through the numbers. If there is any question, Hitesh or myself, more than happy to answer anytime now or in the Q&A session. Hitesh.
Thank you, Mr. Shakib. Company has been consistently growing on a year-on-year basis. Gross contributions have grown significantly. In 2017, it was around 30 million, whereas on 2022, the contributions have reached to 45 million. The underwriting results, on the other hand, have also been consistently increasing from 4.4 million to almost 5 million as of 2022. The investment income of the company has also been growing steadily and has reached to 1.4 million, despite the challenges in the Islamic Sharia space. As a result of which, the total profit before tax profit of the company as of 2017 was 681,000, and it has almost reached to 1.6 million, well supported by the increase in the underwriting as well as the investment income. This demonstrates that company has been steadily on a year-on-year basis growing in a positive direction. With regard to the dividend payout and the return to our shareholders, the company has been consistently paying dividend for the past 7 years. An amount of 8 million has been paid to the shareholders, which is almost 45.5% of our share capital. This demonstrates the strength, financial strength and stability of the company, even in these uncertain market conditions. As a Takaful company, we have to manage the shareholder as well as policyholder fund systematically in such a way that there are surplus and profits in both the funds. For the past 6 years, on a consistent basis, shareholder fund and the participant fund have shown a surplus. With regard to the surplus coming in the participant fund, the accumulated deficit in the participant fund has been reducing on a year-on-year basis. That as of 2022, the accumulated deficit in the fund remaining is only 146,000.
I think I'll add one point here, Hitesh. Actually, if you notice, the graph on the left-hand side shows in 2016, there was a 1.43 million losses. Before that, there were 6 million losses in the participant fund. So in the Takaful industry, you have to manage almost 3 companies in one. It's not just one. That you make profit and you give dividend to the shareholder, like the conventional. Here you have to be profitable in participant fund, not only participant, but general and family Takaful separately. And even the solvency, you have to be in all 3, the general, family, and shareholders. You have to be solvent, you have to be profitable, and then the net profit can be distributed to the shareholders. So we have reduced from 6 million deficit in last 7 years or so to almost nothing. Now, as I speak, at 30th June 2023, we had only a deficit of 3,000 in our participant fund. So we have removed 6 million losses deficit of the past. we have increased our reserves manifold. All of the reserves have gone, when I say manifold, everything has gone by at least 100% and more. So that's one thing to note and very important, because the takaful industry all over, I have seen the region, even if you see Saudi and Bahrain and UAE, all the industry, barring a few, is struggling in wiping off the participant fund, because how it works is they charge more wakala fees and take it to the shareholders' account, show accumulated profit there, but you have losses sitting in the participant fund. And the analyst should look these things, two things together, because you cannot do anything with the retained earning unless you have wiped off the complete losses in the participant fund. That often people miss out, and hence the valuation in the market. But I think the market is now understanding slowly, and I see corrections in various things. Hitesh.
Thank you. With regard to the solvency margin of the company has been maintaining a comfortable solvency margin surplus well above the minimum regulatory requirement. For the year 2022, the new risk-based solvency has been implemented, and company has prepared the solvency as per the new regime, and company has reported a surplus which is more than the previous year with regard to the solvency margin. Moving on to the H1 2023 results. The company completed another successful quarter of financial performance, where the company achieved a gross contribution of 18.2 million, a 3% increase as compared to the corresponding period. An increase was also noted in the net earned contributions. So 7.5 million, a 3% increase in line with the GWC. The net incurred claim, the company was able to achieve a 2% reduction as previous period. This is mainly on account of various claim control measures initiated by the company, which resulted in the decrease in the net incurred claims. The participant fund reported a surplus of 143,000 as of H1 of 2023. The shareholder profit reported is 585,000. Overall total profit after tax was 728,000 as compared to H1 2022, 707, which is 3% higher as the corresponding period.
I think at this stage also I would want to make a comment for the benefit of our audience, is that that if you see the half-yearly result 2023, and the entire industry has suffered compared to if you take the entire industry together in Oman, I'm so talking about conventional and takaful both, there's a dip of almost 7 million, all companies coming together. The biggies also have shown losses, or their profits have reduced significantly. There is only two companies, or maybe three, 2 or 3, three, which are operationally profitable. Out of the 20 companies which are operating in Sultanate of Oman, only 3. One of that is Al Madina, our company, which is on the operational level profitable. When I say operational level, I mean to say the underwriting results should be good enough to take care of all your expenses, and then you have a profit. So underwriting results minus your expenses, almost all companies are making losses, except for us and 2 more.
Moving on to the key performance indicators. The company has seen a reduction in the loss ratio from 61 to 60%. The expense ratio, as the net result of which the combined ratio has reduced from 99 to 98% as of H1 of 2023. The investment composition and the performance. Al Madina continues to diversify its investment book among various asset classes and continues to adopt a prudent investment strategy. We continuously monitor all our investments and ensure that they are continuously in line with the Sharia. With reference to that, the investment income reported by the company was 774,000 as of H1 2023, a 2% increase as compared to the previous corresponding period. The company tries to see wherever the opportunities are available in the Islamic Sharia space, that how the investment income can be increased. And we look into that in a detailed manner and see that how we can improve our income. Summary of the financial position. Total assets of the company as of H1 2023 stands at 111.8 million. The total liabilities are 90.5 million. The share capital is 17.5 million, which is well above the minimum regulatory requirement of 10 million. Legal reserve, retained earning, and other reserves combining 3.8 million. The total shareholders' equity as of H1 2023 stands at 21.3 million. The accumulated deficit in the participant fund further continues to decline. And as of H1 2023, we only have 3,000 deficit remaining in the participant fund as against 146,000 as of Q4 of 2022, which is actually a good sign for a Takaful company.
And as you would know, 3,000 or 146,000 is nothing as compared to other industry players where the accumulated losses are millions and millions stacking up. So the company, your company, is a very solid ground.
Moving on to the next slide, Mr. Shakib will take you through the outlook.
So the future outlook, I think we are somehow or the other touched upon it. Insurance sector is poised for a stable growth due to the government spending and the oil price firming up, not only stabilizing, it's firming up. So we believe there'll be more projects coming to the market. And since we are an insurer of in the technical side, more and more, then we should be able to get that advantage. The reinsurance market continues to harden due to the rate corrections and largely because of the net cat. We get one cyclone or the other every year, and that's why the reinsurance market has increased their rates. Some of the reinsurers have already gone out of the market, so that's a challenge going forward. But we have renewed our treaty for this year on similar terms, so that's fine. Increase association with Islamic Bank to enhance selling of Al Madina products that we are going to do. When the Unified Health Insurance Scheme comes from CMA, the money compulsorily, then the healthcare insurance sector will see a growth and we will have our share of it. We have a plan for that. Focus on innovation, quality enhancement, and strengthening distribution channels. The enhanced customer service experience, we are continuously upgrading our IT. We are onto the WhatsApp, on LinkedIn, on all the other. And soon we will, our customers will be able to report their claims on WhatsApp type of thing, and everything will be done on there. We are working on it, and it should be available early next year. Our emphasis will be stability and sustainable growth. We do not want to go in the maddening rush of just top-line focus. Many companies in the market do top-line focus, but if you analyze them, the top line may have grown 100%, but the operation profit gone into red, and the overall profit has reduced by 40%. So I think that's their strategy. We do not follow that strategy. We want to be stable. We want to grow with profitable growth and slow and steady. Well-planned growth strategy to achieve stable growth and operational profit. I've touched upon it, and maintain our market position as one of the leader. We are always in top 3, 4. And in terms of operational profit, we are also among top 2. The investment is something where the conventional scores higher, and we have to play our game on the underwriting side and be operationally profitable so that we can, if not beat them, we can be there in the top. Because investment yield for the conventional products is almost 8% last year. And for the Takaful space is a 4.5. So if you see, if we were conventional, our investment income would have been doubled. But on the other side, they're losing out on the underwriting profits. They're making losses there. We are making profits. So we have to be very careful in terms of our underwriting book, and we continue to be more and more profitable. And in Takaful, the beauty is if we make more profit in the participant fund, then tomorrow there could be a situation where we have to, or we would like to give back something to our participant as well, which has not happened in this region ever. And we have that plan. Inshallah, there's no Shaheen or Gonu or something like that happens, that we will be cruising on what we want to do for our participants as well as for the shareholder. Thank you very much. I think with that, the question answer session is open. If you have any questions, disclaimer is standard. You can read it whenever you like. We are happy to answer.
Are there any questions?
Hello.
Yes.
Hi, good morning, Hitesh and Shakib. This is Bishan here from Bishan Capital.
Yes, Bishan, good morning.
Good morning. Thank you for the presentation and congratulations on the performance during the first half. Just a few questions. The first one is, you mentioned, and we take cognizance of the fact that you, along with a bunch of players, are the only ones to actually make an operating profit, which is extremely, pleasing to hear, given the way we've seen the insurance sector operating performance over the last probably 3-4 quarters now. One that comes to mind is that we've looked at your loss ratio, etc. Now I understand one of the other players I think is based out of Dhofar, and probably that demographic or that sort of geographical location also plays a part in the loss ratio. But operating out of Muscat, the capital city, how is your business model so different from others on the operating side? Just trying to understand. I mean, I'm sure you have your own strategy, but how is it? Because I'm sure you keep a look at what competitors are doing or what the market is doing. And I think the main sort of price point is, one is the pricing of premiums, and secondly is the loss ratio. So if you could just comment on these two lines, because that's what drives your operating profit currently. If you could just comment on this, start with.
I think if I understood you correctly, your voice was cracking, Bishan. You want to know how we continue to be in profit operationally in terms of pricing and the claims. Is that what you're saying? Yeah.
Yes, Shakib. I just wanted some.
Okay. So of course you will realize that there are certain strategies which is not up for discussion in public. But on an overall basis, our strategy is always to be choosy in terms of what kind of business we want to do. And we look into the past performances. We have a very strong bench of underwriters who price it right. And we do not run after the business, even if they want to go to somebody else on a cheaper rate. We let them go so that they also feel the kind of service they will get it, and the other company will have the losses if there are any. In terms of the payment of claims, we are very, very prompt. We do not have complaints from our customers, and because we put down very clearly what kind of things we are ready to entertain and what we will not. So I think just picking the right thing and doing the underwriting correct. To do the underwriting correct, your losses will always be right because you're pricing the risk right. And that's how we are managing and having the operational profits.
Noted. All right. Fine. Fair enough. Thank you for that. The next question would be with regards to this regulatory requirement or IFRS 17, if I'm not mistaken. Could you just sort of shed some light on that? I believe whatever we've discussed initially with the insurance sector is that I think there's a trial run where you guys are submitting, all the insurance companies are submitting the interim reports to the CMA, and at probably by year end is when you would actually have to take the impact of that. If you could just throw some light on IFRS 17 and sort of what impact, because we believe that there'll be a one-time impact on the entire insurance sector because of erroneous contracts or because of contracts that have a loss ratio of 100. If you could just elaborate on that, please.
Yeah, Bishan, IFRS 17 is a new standard which has come into play, and it's to my mind, it's an annual standard. Okay, so CMA asking quarterly results from the insurance industry is entirely CMA's call. Otherwise, it's not an interim standard. And that standard applies to this particular year from 1st January 2023 to 31st December 2023. We, as a Takaful company, we have a separate standard, which the IOP has. And see, that's the problem with us, actually. We started preparing for IFRS 17. We did the first phase and second phase, and we were the fastest in the market. We would have rolled it out even well in advance CMA guideline. But then the IOP came up with the standards. They're saying, no, hang on, you are a Takaful, you have to follow our standard. And Takaful standard is applicable only in 2020-25. So we still have time to do that. We'll have to change the whole ball game. We have to do our procedures and gap analysis, etc. again. So that's how the Takaful suffers, because we have two fathers. In terms of the industry, I can tell you on the basis of my knowledge, nobody in the industry is actually 100% right in terms of the application of IFRS 17. They're only doing on a trial basis. Some of the consultants are helping them, and they are doing the crunching of their data somewhere else. Some of the companies do not even have a trial balance, unless I say with full responsibility, because this is produced by a consultant. And if you ask them for the trial balance on the numbers, so there is something, there's a haze around IFRS 17 implementation in the market. You will only come to know the right numbers under IFRS 17, and that's why I would recommend people to look at IFRS 4 numbers. Continue to look onto that for the real numbers. Once the auditors do it, etc., after 31st December, you will find numbers changing. As far as we are concerned, we are still on IFRS 4 type of reporting environment.
Noted, Shakib. Thank you for that response. So just to hear you clearly, just a further clarification on 2 points. The first one, is that there would be a CMA audit or sort of an overview on all insurance companies mandated to follow IFRS 17 to sort of level the playing field, to make sure that whatever they're doing in the interim is eventually audited by CMA as per their own satisfaction based on the year-end numbers. Is that a correct understanding?
Please repeat it again. I didn't get you. I got it in bits and pieces.
Okay. I'll 1 second. I'll just try and 1 second. Hold on. Yeah. So basically, I was saying that at the year end, CMA would conduct a sort of audit on all the insurance companies to ensure that they have followed the IFRS 17 to their own to CMA satisfaction, and not, like you said, a consultant draws up a sort of, I would say a hypothetical scenario which the company itself is not aware of, and it's a makeshift interim sort of situation. So by year end, CMA would themselves do a proper audit on the way IFRS 17 has been presented by all insurance companies. Is that correct?
I think year end, yes. Year end, they will have to look into it. And I think my understanding is, although IFRS 17 is not my standard right now, but I sit on some of the boards in Qatar as well. So Qatar Regulatory Authority has appointed certain consultants to look into this financial statement, because they don't have the kind of knowledge which is required. You would know that IFRS 17 is one of the most complicated standards. If you put all these standards in one book, only IFRS 17 book is thicker than all those standards. So here also CMA would probably, and I can't talk on behalf of CMA, but they will have their own experts looking at it at the year end. So your year end number will then fall in line.
Noted. And Shakib, the second clarification, and you've been kind enough to sort of, even though it's not in your sort of scope of work, you've been kind enough to explain it. Based on your understanding of IFRS 17, and you are a sector expert, what do you think the impact? I mean, our initial assessment was that it would have a one-time negative impact on insurance companies because of these accounts that have to be booked upfront that are loss-making. Or is there more to it? Is there a upside to implementation of this for an insurance company? Is there a downside? Is it something that is subjective? If you could just give some, I mean, without getting into numbers, some sort of roadmap or guide ahead.
Vishen, you are making me run a IFRS 17 class. If I was KPMG, I would have done that and charged you. But anyways, I think my knowledge of IFRS 17, my limited knowledge is that it will depend on what kind of the portfolio you carry. If you have a long tail portfolio, it will affect you differently. If you have a profit-making portfolio, it will affect you differently. The insurance companies which do not have a long-tail portfolio, i.e., all the business they write is one-year business, they won't have any significant impact. And neither positive nor negative, it will be insignificant impact. That's my understanding of the standard so far. So, for example, us, I can talk about myself. We do not have long-term businesses or long-tail businesses. So our effect will be minimal. You won't see a big change in the numbers.
Yeah, noted. Thank you. Very kind of you, Shakib. The next question would be either to you or to Hitesh. We look at your
vision. Can we give an opportunity and a chance for others to ask?
Yeah, absolutely. Please, I'll wait in queue. I'll wait in queue. Yep, thanks.
Please.
Is there any other? Oh, yeah, one question is there on the chat.
Yeah.
What's that?
Almost 22 insurance companies. Al Madina is within the top. What is Al Madina follows to reach at the top level?
I think I've answered that. One, we do business very carefully. We select the right risk, and we have the good underwriting bench. We have a specialist for each line of business who price our risk right. We do not run after businesses which are known to be making losses for many, many years. And that's the reason we continue to be among the top.
Okay, I see a hand raised by Ritika Gupta.
Yeah,
Ritika,
hi.
can you?
Yes. Hi. Thank you for taking my question. I just have a couple of questions based on, I've understood that the company has been quite stable, steady returns, everything has been going good. So what I want to understand is what do you want to, plan to do as the next step for growth? Do you plan to spread across other geographies, such as Saudi or other GCC markets? Or secondly, probably look at other M&A options because the sector has been consolidating. I understand it's only, there are just too few companies on the Takaful side, but what is the next step for growth is what I want to understand.
Nikita, we do not have any plan right now to go into M&A space because there's only one another company. If we merge or buy or acquire, then there will be only one monopoly in the market, which the regulators will also not allow. Plus, we do not have such a plan right now. In terms of going to the other geographies, we have investments outside Oman. In UAE, we have Noor Takaful, where we have our investment. Right now we want to become the leading in the Omani market, and there is so much more to be done in Omani market. We stabilize. We don't want to take a knee-jerk reaction that now we have profitable, let's invest somewhere else and make losses. That's not the philosophy our board follow. We have to first be very firm and the top player in Oman, and then we think about other geographies.
Okay, great. Thanks. And just one more. I'm sorry I joined late. So on the outlook for dividends, probably you've answered it already, but what is the outlook for dividends going forward? It's been steady so far. So how do you look at it in the future?
See, dividend is a direct function of profitability. And if you see last 7 years, we have been paying consistent dividends. And as we stand on the half-year basis, we are still profitable. We are cruising almost at the same level, if not better. And you would appreciate that the insurance is a risk-taking industry, and one cyclone comes and everything wipes off. So you have to keep your finger crossed. If everything goes right, inshallah, we will be paying dividends.
Okay, thank you.
You're welcome. Anybody else?
Any other questions are there?
Hello?
I think, Bishan.
Yeah, Bishan.
Go on.
Yeah, am I at the top of the queue if there are no further questions?
Yeah, it seems nobody asking any questions, so you can.
All right, thank you. The next one would be with regards to your investment book, and I know you mentioned that being a Takaful company, there are certain limitations, compared to a conventional insurance company. But having said that, if you look at your investment book, you have approximately, as of second quarter, around less than 10% in equity of your overall investment book. So what's your strategy for managing the equity portion, the fixed income portion? I get it, it's fixed deposits or sort of sukuk, etc. But what is your strategy, or what's your firstly, is it managed in-house, or do you have an investment manager? How do you look at your equity book? And sort of, is there a sort of strategy to enhance that equity book? If you could just give us some flavor on that.
Kishan, thank you very much for the question. We have been managing the equity book in-house, and we are looking at various alternatives or opportunities, where we can enhance our investment yields from the equity side. So we are exploring certain options, like whether we go for a fund investment kind of a thing, or like explore our portfolio further, like go for outside for foreign investment. So that study is under process right now, and hopefully we will be seeing some changes in our portfolio.
Okay, yeah, because that's one area we felt where there is scope of improvement. I mean, operationally, you guys are the experts. You guys know how to go about it. On the investment side, we generally tend to take a view for insurance companies, because that's one way of sort of, at least in this scenario, if you look at insurance companies, we understand that they're making an operating loss, but a lot of insurance companies actually pull through because of the investment book. I mean, irrespective of the split of debt equity, we've seen that over the last 2-3 years where companies have sort of made money on the investment side. So even if the operating performance is a bit sluggish, which is the case across the market, they still be able to be profitable.
I beg to differ here, Bishan, with you. Sluggish is not the right word, because you have to compare apple with apple. You have to compare the returns of the yields of the takaful companies. Okay, takaful companies cannot go aggressive into the market, cannot go into any equity. It has to be a Sharia compliant and in Sharia index of MSM. Even if it is a telecom provider, even if it's a flour mill, and if they have taken a loan from a conventional bank, we cannot invest there. And actually, we had some investment where we had to exit on a loss because the Sharia doesn't allow us to continue to hold those equity. So the takaful will always have this challenge. And recently, one of the big four professional firms did an analysis for 2022. And I can share offline if you want to have a look at it, because it's in public domain. The average return in the region for the takaful was 2.5 only, and we are doing 4.5. So that means we are able to leverage whatever we have in such a way that we are getting a better return than most of the takaful industry. So please look into takaful industry space. And as I speak, takaful is not really a profit-making exercise. Takaful is more to do things right and be able to serve the society also. That's one of the objectives of takaful.
All right. No, I mean, I appreciate that, Shakib, wholeheartedly. I mean, we look at it from an investment point of view, but I get your point and I get the limitations. So my idea was not to sort of compare apples to oranges, but to sort of look at the investment book as a vehicle to sort of make money as well. And I get it. If that's the strategy of the company, I appreciate that. Yep.
Thank you.
So that's it from me, gentlemen. Thank you so much and wish you all the best for a great performance ahead.
Thank you very much.
Thank you very much. And we are thankful for your attendance today, and have a nice day. If there are no questions, then we can end the session.
Ma salama.
Thank you.
Shukran.
Thank you.
Thank you.